There is one stock that is about to skyrocket. The company is American Electric Power Company, ticker symbol AEP. It's $6 billion of revenue, up 10% year over year. And power is basically the one unsolved part of the data center hyperscaler AI equation. This company is there to provide it. If power companies are not something you want to bet on, well, you can bet even more closely to the AI narrative and bet on a company called COHR, Coherent. This company is also interesting, and they do optical connections. Their revenue is up 25% year over year. So they definitely have a growth story. They're in a sector with a lot of other companies that have done well. Lumentum, Applied Optoelectronics. So their laser technology is definitely needed to have high bandwidth, transfer a lot of information between NVIDIA GPUs, and basically provide all the networking that needs to actually happen to transfer all this information quickly and get an answer to you on your ChatGPT very fast. So those are the two companies, in a power company and optoelectronics, a laser company, that I think are very interesting based on the charts right now. If you like these ideas, hit that like button. Let's jump into a little breakdown.
This is Sam Putnam.
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 Okay, so here's American Electric Power Company, $60 billion company, and they do generation and marketing. So marketing is the how they basically divide up the power and sell it to different parts of the grid. So coal, natural gas, nuclear, hydro, solar, other energy sources, they got it all. And you don't have to bet on, hey, I'm going to buy this nuclear power company at a time when Oklo, the Sam Altman SPAC, is down significantly, and NNE, SMR, the small nuclear reactor stocks, are down. You don't have to guess the bottom. You don't have to buy some natural gas stock and just hold on for dear life. You don't have to buy a coal company. There are some coal companies that are doing well. I believe Hexcel might be one. Don't quote me on that one. American Electric Power is a way to bet on it all, a public utility, because we know there's going to need more power for these data centers. Customers are already complaining about power prices going up. Of course, the backlash to that is being met with, okay, well, we'll just pass the cost on over to Meta, to Amazon, to Google. They'll just pay more, and customers' prices are not going to go up. Of course, the more AI has a positive public perception, the more likely all this build out is going to happen. The government's been given the green light. They are giving the green light through that Stargate $500 billion contract project. Government's not adding any money. SoftBank is putting money into it, but government is saying we're going to make all this permitting happening for all of these power companies to basically allow OpenAI and its competitors to use all this compute and have enough power to actually not be rate limited, which I'm sure you've experienced if you use ChatGPT or these other LLM companies. And these are only the public-facing ones. There's a lot of enterprise-related AI companies as well. So American Electric Power, it sounds old and like, classic, but it's increasingly connected to large data center operators, cloud tech firms. And we can talk about that in just a second. First of all, here's the actual earnings, which is up 10%, $6 billion. And compared with a year ago, the earnings per share is down a little bit. Revenue growth is strong. So here's what the chart actually looks like and why it's interesting. You can see on a 3-year chart, we've pretty much just gone up. Okay, so that's good. But you still have to look for an entry that's low risk. And whenever you see, what is basically a flag, it might mean nothing, but some of the time it means we're definitely going to see a move up. And there have been, a handful of companies that have basically followed that trajectory. Not all of them, But look at this move. I mean, some of these biotech companies are just prime examples of, sure, anybody can see this, anybody can draw it, and that's a good thing. The more people can see it, the more likely it's self-fulfilling and actually happens. That is, when it's a real company. So these biotech companies, these are big companies. You can see they're not crazy big, but this is at least 30 million in revenue, 30 million in dollar volume per day. Arcus is a little bit more than that. And not every company that forms out a flag does break out. We'll see if IMAX actually moves up or just channels, as an example. Some of them definitely fail. Here's an example of one that is doing well. But if we look at MedP, went sideways, built a base, and then sort of failed. So maybe it'll build out more. But the name of that game is, you buy in one of these tight days, you sell out some on a move. Well, 3% move, you probably wouldn't sell out any. You'd probably just stop out at some point on this one or just hold it to your average. But you only have to be right 3 out of 10 times and make a lot more on those 3 wins than those 7 losses. And AEP right now is providing a really low risk entry opportunity where you can risk really $1 and look for $10 or more to the upside. And on a 30-day, you can pretty clearly say, you know what, this line right now is definitely interesting, where it tested here and then tested over here. So somewhere around 121.5, maybe today's open. You could even just use that and say, right here is where I'm going to risk. And then say, $10 up is kind of what you're looking for a move, which is a little less than 10% because we're a little bit more than $100 stock, but it only moves 2% a day. So you really aren't expecting a 10% move in, any less than 5 days. And you don't necessarily look for a 5-day spurt. You really only expect 3-4 day spurts. You see in Wolf 1, 2, 3 days in a row. And sometimes you see moves up, this is really only 2 days and you already get a pullback in a stock like Reddit. So not all stocks move the same, but you do want to be a little bit cognizant of keeping your expectations in check. This run only happened really because September was such a crazy run. I mean, it went on throughout after September. But you can see this is 10-10 when the market came down and AEP was strong relative to the market, but that sort of killed its momentum. So that's American Electric Power. This is the recent earnings. And this is actually a pretty solid earnings reaction considering other earnings reactions this quarter, where a lot of them have been dragged down by the market. And the market has, you can see in the background, not done so hot. It's reached that high right after Trump met Xi in South Korea. And even though they all sort of talked hunky-dory, the market still came down significantly after that. So only recently getting this bounce, which has been a crazy bounce. But the great thing about AEP is it hasn't participated in this bounce, because if it had, it would be overbought. So that's a lot about that chart, but the chart really tells the story about where buyers and sellers are actually, their revealed preferences. So double-digit year-over-year growth and beat, which is solid. They have growth plans. They definitely are positioning for data centers and higher power loads. 5-year capex plan of $70 billion, which is crazy, but it's actually more than their market cap. So we'll see what actually happens out of that. They're projecting about up to 10%-ish operating earnings, and they expect to have 10% more customers, basically, that they're serving every single year. That's compounded annually. So that's the plan. This is the real unknown, is how much of this power is actually going to get approved. That was sort of the government's whole role. They do have that sort of backdoor to the White House. That is, Silicon Valley does have it through, some of their appointments. And, you literally see pictures of all the big tech lords eating dinner with the administration. I mean, they're not eating dinner for no reason. But it still has to happen. And customers have to think that AI is good for them, which definitely middle America, at least, is not seeing the benefits of AI and doesn't love it, as far as I can see. So they're a regulated utility. They do need rate increases approved by state regulators. So they need the public to embrace more power. Hopefully that lowers the public's prices if they can have some sort of narrative like that. They'll definitely be in the right in the public's eyes, which will actually make this happen. So they do have this subsidiary, Indiana Michigan Power, which has a deal with Amazon Web Services, Microsoft, and Google. So they do have explicit deals. And this is a deal with Blue Energy. This company has their fingers in basically all of the most exciting companies of the moment. Blue Energy is that mobile power company that can connect directly, to provide power to a data center, sort of redirect natural gas and generate power on site within a few months or less. I think XAI utilized Bloom Energy to make that happen. They're massive, colossal data centers. So this is their plan, $70 billion. It's really trying to be a cloud provider backbone, a data center a backbone. And we can look at these other companies. This is a sleepy company, Dominion, that ticker symbol D, ticker symbol Southern Company, is also sleepy. It's slow moving. Excel Energy may be a little bit more related, but I think AEP is definitely the most interesting chart-wise. So that's the idea for power. This is Excel Energy, XEL, and we can take a look, but it's good. It's just it's been building out this base for a while. If you want to sit in this for another month, you can, but probably makes more sense to look at AEP, in my opinion. Next Era is even moving more than Excel. So there's other companies that are interesting in power, but you start getting into energy companies, oil companies, then you have to start looking at the price of oil. And I just think this is a cleaner play. Next Era as well, I've been talking about a lot because they have that connection to Florida Power and Light, which is a real innovator in energy storage, load balancing, which is a way to make data centers happen. So Coherent is the other idea here. Recent earnings holding up from there, big beat, and it looks strong. Its peers don't look great. I mean, AAOI has been choppy this whole run up. It's been really difficult to get positioned and don't really love it here. Lumentum, maybe you could take a sort of dip buy, sort of a meta type dip buy idea, but you try to buy the dip on meta, it's just a falling knife again and again. So I think Lumentum is really the only type of dip buy that looks reasonable. LITE actually is Lumentum. I'm talking about Lumen here. LIT already broke through that $300 level, so probably not worth looking at. It needs to cool off for a little bit. And I do think Coherent is at a really reasonable level where it's shaping up, sort of a flag, and hasn't gone yet impressively the last 3 days, even as the rest of the market has jumped up significantly. So I think it's in a good spot. And if we look at basically what they're up to, well, $1.5 billion, up 25% year over year, record revenue for Coherent, and margins are improving. So this is the strength from data center and networking demand. Super solid. There are some headwinds. We'll see. I mean, we know lasers are needed, optoelectronics are needed, but maybe this is sort of the old school version of lasers that are components that are not actually going to be part of this networking AI portion of their business. This is what they do. They are a provider of lasers and laser-based technology for scientific, commercial, and industrial. So maybe the scientific part is pretty much getting phased out as far as their core focus, and they're just transitioning all in to this AI data center build out. These are the big companies that they are, connected to, NVIDIA being the major one. That's pretty much all you need to know. But they are using lasers for that combination with NVIDIA. So that's a little reassuring considering that's their bread and butter. They're not just scrapping that. And they've provided optoelectronics networking for data center operators in the past. So this isn't a completely new development. They also spun off part of their business for lasers for defense for $400 million. So lasers is really an all-encompassing just chip component that is good for all type of electrical applications. It just so happens that it does help with basically sending information, I believe, at the speed of light across GPUs. And these are the companies in the conversation. We already took a look at Lumentum. They also do optoelectronics lasers. It's pretty much very similar. And right now, instead of digging into deeply on a scientific level which one does what, I'm doing what a lot of investors, I think, are doing, which is say data center optics are definitely required. And the movement of these stocks shows that. And right now, Lumentum Light already went. So you got to look at the one that hasn't gone, that isn't choppy, and that, hey, maybe you can get a dip buy, but it's not necessarily going to go up. So that is the argument for coherent. We'll play on words, coherent, light, optics, physics, whatever. I don't know. So COHR is the ticker, and I think it's pretty interesting, as well as American Electric Power, if you're more interested in exposure to a utility, if that's okay with you, given the regulations that might come with that on the state level. So those are the ideas. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to try out our Cyber Monday deal for $19, head over to stockscommunity.com. Give that a try. You'll see some great testimonials there. And I'll see you in the Discord.
This is Sam Putnam.
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 This is Sam Putnam.